Hey guys, before we get into the interview with Millennial Moron, the best way to support the channel is to like and subscribe so we can keep getting big guests on this channel and try and bring you the best, most up-to-date free information on the Canadian economy and the Canadian real estate market. So if you haven't done that already, please do so. We appreciate it so much, and we love the support the channel gets. If you're in the greater Toronto Hamilton area and you're looking to buy or sell real estate and you want to book a completely free call with Brooke and myself, you can click the first link down below in the description. It'll take you to a calendar. You can book a call in the comfort of your own home and just see if we're a good fit for you guys. So we appreciate the support. If you want to work with us in the real estate market, awesome. If you don't, just like and subscribe on this video. It definitely helps push the algorithm out and allows us to get more big guests on, like Millennial Moron. I'm super excited for this one, so let's get into it. All right, guys, welcome back to the Canadian Real Estate Homefront podcast. I'm excited for this one. We have Millennial Moron, who is coming on the show with us today. He is a TikTok star, pretty much. He's got over 170,000 followers. Not quite what you think about TikTok. He just talks about the Canadian economy. He went pretty viral when he talked about a castle in Europe versus what you could buy in a rundown house in Vancouver. I follow all his videos. I watch all of his stuff to get a different perspective and just understand the economy better. So he is definitely way smarter than me. So I'm happy to have him on. And he's also not a realtor, which makes people very excited. So Millennial Moron, welcome to the show and thanks for coming on.
Hi, thanks for having me.
Anytime, anytime. All right, so let's just kind of get into things. You're not a real estate agent and you just kind of made videos because because you wanted to help people, or you just thought it was the absurdity of the Canadian real estate market and prices, and you just want to put your opinion out there, and I guess it resonated with people?
Yeah, I think it was just the absurdity of it. I mean, after the however many years of trying to explain to people why I thought it was a problem and nobody really wanted to listen to me, I thought I would just make, some funny videos about houses in Canada versus private islands that you could buy elsewhere, which is an idea I had like 10 years ago. But I got a lot of people in the comments asking, what's going on in Canada. And so I thought, well, I'll give it another shot and started explaining to people what I thought was going wrong and just kind of grew from there.
Yeah, I like it. I think that a lot of people don't understand absurdity till they start digging into the numbers. Like I don't know if you follow like other equities like GameStop and stuff. They were talking about like valuations. I was watching this podcast in the All In, and like the EBITDA valuation. They're talking about all these like small metrics that you can do with like your Apple calculator. And most companies trade at like a 7 to 12 multiple, and GameStop's trading at like 192 multiple. So when I look at real estate, and what always scares me is Canada's not productive, and our median income to house price is about like 10x, something around there. If you're in Toronto and Vancouver, it's even worse. So that's where I try and like touch on stuff, and then I'd always get flash, pushback of like, you're wrong. There's not enough housing, which is true, but you're wrong. There's not enough housing. But for me, it's like, how many times can prices keep going up without incomes exponentially going up as well to be able to afford such homes? Just getting your mic all fixed. This is live TV, guys. Sometimes little issues here, but I think we're good.
Yeah, it's it's just the port on the microphone is kind of broken. Yeah, I mean, I think you're right. The I guess equivalent to EBITDA or the PE ratio or whatever you want to talk about in real estate would be the capitalization rate of a rental property. And I think we've seen basically an indicator that there's been a lot of speculation going on in Canada is that capitalization rates are ridiculously low or even negative in a lot of cases. And people are relying on price appreciation to keep driving prices up. But that price should be attached to some underlying income that can be derived from your investment, regardless of what it is, right? I mean, people do say, GameStop or Tesla or whatever to me to say that, investing in stocks is speculative as well. And I would tell them, well, there are speculative stocks, obviously, like, yeah, people can do that, but we have basically an entire asset class in Canada that has become speculative in real estate. And yeah, people say, supply and demand, things can't going up, things can't keep going up forever, or they will keep going up forever because we don't have enough houses. But the fact of the matter is we've now seen a reduction in the money supply. And I think that's what a lot of people are not wrapping their heads around, is that there is a monetary side to supply and demand as well. So a lot of these asset valuation increases that we were seeing over the past 10, 15, 20, maybe even 30 years were driven by interest rates going lower and lower, right? So you can carry a much larger mortgage for the same monthly payment. So why not just bid up the price more if you have the same amount of income and the same amount of assets that the same people are competing for? if you can access debt much more cheaply, then naturally prices are going to go up because people are still competing for those assets. The trap that we've kind of gotten ourselves into is that we really maxed out our leverage at ridiculously low interest rates. And then interest rates went up, over the course of a year from 0.25% to 5% with the Bank of Canada's overnight rate. So you saw the rates on mortgages, double or triple or even quadruple, depending on when you got in. So I think I don't see how we can sustain our current price levels if people don't have enough income and enough, real economic activity coming in to support that debt load.
Yeah, that's a very good answer. So the Bank of Canada just cut rates by 25 basis points, and it's funny because I had so many people reach out to me and say, "Okay, so is my rate coming down?" Well, most people take a fixed rate, and if you look at the bond yield, which is connected to the fixed rate, that actually went from 3.4 to 3.5. So in the next couple of weeks, we should actually see fixed rates increasing more than decreasing. So again, for people who don't know, but if you're a fan of the show, you should know that the variable rate is connected to more the overnight rate is connected more to the variable rate, which is right now quite substantially higher than the fixed rate. So even if you take the 25 basis point cut for every 100 grand that a borrower had who had a variable rate, it decreases their payment by about $15. So all these realtors posting on TikTok. I made a YouTube video about this because I just couldn't handle it. Just saying, first time buyers, you need to get in now because rates are going to keep going down, 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 and prices are just going to go up, up, up. And to me, it's just like this uneducated society, just to show that I want to make a buck. How do I make a buck as a realtor or a mortgage agent? Is to create this FOMO out in the marketplace. So what do you see from an analytical kind of guy who looks at the data? Like, what do you see going forward in terms of interest rates?
Well, as you said, the fixed rates have been going up, and that's because they're based on the 5-year bond yield, or whatever term bond yield is being applied to the term of the mortgage. And those have been going up because markets were originally pricing in anticipation of a lot of rate cuts over the next couple of years. And now we're starting to see market sentiment shifting towards rates are going to stay higher for longer. So the fixed rates have been creeping back up because they price in what they expect to happen. So this will provide a tiny amount of relief for variable mortgage holders, but really in terms of what happens with new mortgage rates right now, I don't think you're going to see an instantaneous response in home prices, because the other, I guess, lagging factor out there, which I've talked about a few times in my videos, is when you look at the rate offered for new lending versus the average rate for existing lending on fixed year mortgage terms. And you can see that people who are currently carrying a fixed rate mortgage on average have a much, much lower rate than what you can actually get in the market. The spread was, last time I checked, it's only 250 basis points of spread, right? So you need not just one rate cut of a quarter point, you would need 10 rate cuts to actually make those lines touch and justify where prices are right now, right?
Right.
So if you have all these people who are carrying these huge mortgages, especially people who are highly leveraged investors, right, who have been, borrowing against one home to buy another one, and a lot of people have been doing that because they think leverage is the big advantage to real estate, but it does cut both ways, right? And if you're renting all these cash flow negative or barely cash flow positive properties, and then suddenly your interest rates start jumping when you start renewing, then you're going to have a big cash flow issue, and you might not be able to withstand that if you don't have a ton of capital saved up. So where would you get capital in order to pay off those other mortgage payments? You would basically have to sell a property if you don't have a lot of other assets. So I think one of the things that's really interesting that we saw in the Toronto market just in the past few days, and it was Rob Marsilio who posted about this, but after the rate cut, there was a big spike in listings, but not sales. So I think we're seeing people trying to strategize what they're doing with housing, but they haven't fully wrapped their minds around what's coming, right? I think right now, given that there is such a big difference in what people are paying versus what they're going to be renewing at in the next 2 years, because we're only expecting to see maybe another like 7,500 basis points in cuts at the end of next year. So rates will still be going up. So I think people who are trying to sell, or people who have a lot of debt that they have secured against real estate, are in much more of a disadvantageous position right now looking forward. Unless, you've owned for a really long time and your value has gone up a whole lot, and you haven't continued to borrow against it, then you're probably in a very secure position, as anybody is if they stick out an investment over the very long term. But I think, the question is what's going to happen in the short term. A lot of people have homes that don't have mortgages on them, but a market happens where buyers and sellers meet, right? So it happens at the margins of those two groups, not at kind of the secure core of them.
That's really well said. You're very right with these. The condo investments is where I get worried about that market in Toronto. And like when people look at housing starts, they look at a condo as like a start, right? And when you see that, you're like, okay, all these condos are going to be coming into completion pretty soon. None of them are going to appraise, and they're going to need people to rent them out. So you see these investors asking an exorbitant amount of money for a rental property because they're so cash flow negative. And eventually, like you said, the seller and the buyer meets, but the investor and the tenant has to meet as well. So that's where we're seeing a lot of pain, and then people offloading properties as well, especially in Toronto, because I did the math. To own a one bedroom, it costs you about $4,000 a month, and to rent that out right now at these rates, you can rent it out for about $2,500 a month, which is still mind blowing for an individual to be able, for a one person, maybe it's a couple, but for one person to afford a condo at $2,500 a month, not to mention all their other expenses. But what's your opinion on home equity lines of credit, right? So, I always see this all the time, is that people kind of got rich by mistake because the housing market did its thing. They made a ton of equity and they pull out equity. And people who understand debt and like looked at previous cycles know that debt can be very, very dangerous. It can almost be like a gambling problem. So you take out this HELOC against your house, which is a floating rate, and then you go buy this next property, you're taking away from someone who might have been able to buy it. You're putting more people into the market. You're almost creating another pool of buyers out there investing and contributing to the housing crisis. Now you could argue that, well, they're putting it out there as rental supply and we need these people to take HELOCs against their home. But I've always just wondered, I always felt it was a dangerous game. And I know OFSI recently changed the amount you could take out of your home too. So I think they're seeing it as a dangerous game as well. But I'd love to hear your thoughts on that.
Yeah, I pretty much agree with that. And with OSFI, it is dangerous to have this amount of debt secured against a single asset class that has been ridiculously inflated over the past decades. And as you say, it does take supply out of the market where first-time home buyers could be getting in, and saying that, yeah, instead, investors are going to buy everything up, especially in the resale market, right? I don't think investors buying up resale properties are really adding anything to the housing market in terms of like functionality or use for actual people. It's, you don't even have the argument that they provided seed funding like you would with pre-con buyers, which is a whole other problem in that market
Yeah.
right now. But yeah, like HELOCs, they're, like you say, floating rate, and they're also demand loans, right? So there's the risk of the bank calling in the loan, which they probably wouldn't do unless they thought you were in a very risky position financially. Because banks like making money and they like keeping people in debt for as long as they can, because then they collect interest, right? But the other issue is, if your home equity drops or you have some kind of regulatory change, like with OSFI, that's a thing people don't understand at all, is regulatory risk of an investment. Then you could be on the hook to come up with a lot of money very quickly. And I think we're seeing that happen with some people where they've basically accessed all of this home equity through HELOCs to expand their real estate portfolio. But now they're in a situation where that debt is getting a lot more expensive to carry at the same time that home prices are decreasing. And like we're seeing that start to hit people at kind of the most risky, most vulnerable investment classes first. Like I think that the earliest cracks that we would have been seeing were like fraudulent pre-con speculators, if you know what I mean, like people who had basically falsified income documents and whatever to secure a mortgage to put down a deposit on a pre-construction condo or home or whatever, with no intention of ever actually closing, right? They were going to do it as an assignment sale before they had to close on it. and just make a whole bunch of money. And there are some people who legitimately secured a mortgage, and there were some people who illegitimately secured a mortgage pre-qualification for that sort of thing. So then you run into people who cannot close and can't find a buyer, and can't come up with the money, so they're getting sued by developers. And then now you're starting to see, people who had a lot of shell corporations that all carried a lot of debt. You've seen some of those starting to implode. You see a lot of highly leveraged real estate investors starting to see strain, and also individual homeowners, if they're people who bought at the peak with a variable rate mortgage. And I don't think it's going to be getting better over the next couple of years. I think we're going to start seeing that continue spreading out into the broader market. Like we can say that, for example, the delinquency and foreclosure rate is really, really low. Like it's only now creeping up back to like more historically normal levels. It was very low during the pandemic because people had so much extra savings, and that created kind of a cash buffer that's carried us through a bit. But now it's creeping up. And if you look at the alternative lender section, like if you look at the CMHC mortgage industry report that they just released, you've seen the delinquency rate jumping a lot at, for example, mortgage investment entities. It's up to something like 4.8%. I don't know the number off the top of my head, but more than 4%, less than 5%, which is a lot, right? Now they only
Yeah.
make up something like 1% of the mortgage market, but their share of the market has been increasing as people become more financially stressed. Normally what you see is people moving from those alternative lenders when they first buy and don't have a lot of other options, and kind of moving up to an A lender as they continue, because it's more secure, it's more regulated, it's more predictable for the buyer. But we're seeing people move the other way now, like people who got a mortgage with a traditional lender now can't afford the payments, and so they go to an alternative lender who might have more flexible terms or might offer an interest only mortgage for a year or something at really high rates, and they're doing it to hang on to the home. But I think we're going to start seeing that continue coming down the line in terms of the cracks we're seeing in the overall market.
Yeah, yeah. I'm in the alternative lending space, so I know exactly what you're talking about. Basically, for those people that don't know, is someone can't get they can't get a mortgage with an A lender, they go to a B lender, and it's kind of a pool of investors who have extra cash to invest. And then it's interest only, and it's a year term, and there's an exit plan. But like Millennial Moron just said, sometimes the exit plan doesn't go according to plan, and the B lender does not want to renew the property, ultimately forcing a sale. I dealt with it where I helped an older couple sell their place because they were with their B lender, and the B lender said, "Hey, we're not renewing this, so you better put a for sale sign up." So there are those cracks in the market for sure, and they walked away from their purchase price, and their walkaway price was a substantial amount of money. It was a huge difference in pricing. So there are these scenarios where people are hurting, and I think it comes from this idea of market only go up, and when it goes against you, this is where the cracks happen. So I'm just curious, how do you think that we got here? Now I know that's a very broad question, but I think that a lot of people have looked at real estate as this asset class of, this is a good place to put my money because it's a good investment. And when you look at the States as an example, their stock market is just absolutely massive, right? Equities are big. They have big companies. There's a lot. I think there's a lot more opportunity there. That's not just, hey, let's buy this house and hold it forever. I don't really look at real estate as a productive asset because it doesn't create jobs. It doesn't have, exports, or it doesn't really do a whole lot other than just park your cash there, collect a rental check. I guess you could argue that it creates some jobs in construction or plumbing, but they're not consistent over time. So yeah, I'd just love to hear your thoughts on how you think we ended up here.
Yeah, and I keep saying, especially recently, that real estate is an unproductive asset when I'm talking about the problems in the broader Canadian economy, because we've sunk so much of our capital into real estate. Real estate rental and leasing is by far the largest sector of our economy. It overtook manufacturing quite some time ago, and now it's not even that close. But yeah, to answer your question, I think one of the big ways that we got here, and the primary driving factor, is debt becoming cheaper over the long term. And we have kind of a long-term problem with short-term thinking, in a lot of ways. But in terms of mortgage rates, the government has come up with a lot of programs to try to increase liquidity in the mortgage market and drive down interest rates. And that was kind of their idea of how to make housing more affordable. But I think, in this sense, the supply and demand people are right. If you want to make housing more affordable, what you need is more housing for the same number of people. More housing per capita, let's say. Whereas if you just give people access to more debt, as I kind of described earlier, they're just going to bid up the price more and more, right? If you have two people and there's one house available to buy and they each have, $200, they would each be willing to pay $200 for the house. And then if you say, okay, we're going to let you also borrow $1,000, that doesn't make it easy for people to buy this $200 house. It just turns it into a $1,200 house. So I think that's the big part of how we got here. But that also created this cultural expectation of real estate being a bulletproof investment that leads to a lot of, personal wealth. Because I think people saw their net worth increase so much, even just through their primary residence, that it seems like real estate is this incredible investment. So it's been programmed into people that buying is always better than renting, even if, you can show people the math over and over and over again to show that even if you're talking about non-recoverable costs, right, it's more expensive to buy than it is to rent, just because of your mortgage interest and your property taxes and blah, 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 and whatever. And they're like, well, after 25 years of renting, you have nothing. After 25 years of mortgage, you own a house. But the question is, if there is that cost difference, what did you do with that money in the meantime, right? Or what did you do with the flexibility to move wherever you wanted? I think what's missing from that discussion all the time is opportunity costs, because people assume, okay, if you save some money renting, you're just going to go spend it on whatever. But if you actually invest it into something productive, then you can end up with a lot more money. Now, I say this as somebody who bought a home myself a while ago, but I think that's because, it was a little bit balanced when I did buy, and there are like those intangible benefits to being a homeowner, like having more control over your space, just more predictability and stability. But I don't think it's always, hands down the best financial choice. I don't know even now if I am better off financially for owning than I would have been renting and continuing to invest. But, life isn't just about maximizing your net worth.
It's a good point. Yeah. Like it's also where you want to grow a family and not being kicked out of your home if the landlord wants to sell. So there is some of those intangible benefits that you do talk about. But yeah, the cheap money thing, what do you think about basically just supply and demand? Like, if you let 1.2 million people into a country in 1 year, I mean, no shit that rental prices have gone through the roof, which ultimately kind of hurts like not the lower class, but the people who can't get access to owning a home, or they just weren't born at the right time, or they don't have enough money for a down payment. What do you think about kind of this mass immigration, if you can call it that, that the liberal government has done? And I know other governments have done it too, so I'm not just pointing out the liberal government, just this general thought of like, hey, let's open up the floodgates because we have a cohort of baby boomers going to retire. So we need to keep our productivity up by bringing more people in and doing these jobs that the boomers aren't going to be doing soon. So what's your take on that, if you don't mind me asking that question?
Yeah, I've talked about this a few times, and I think the big issue that we have right now is a gigantic increase in non-permanent residents, which is not good for anyone, including them, right? We don't have the infrastructure to absorb a massive increase in the population, both in housing and other like social programs and whatever. We're growing our population much faster than we can actually handle, and I think it's predicated on this false premise of a labor shortage, when there's not really a shortage of labor. It's just that employers and labor have not agreed on a price point yet. But there's still far more unemployed people in the country than there are job openings, right? So what exactly are they doing when they're saying there's a labor shortage and we need a bunch of highly exploitable non-permanent residents, like temporary foreign workers or people in the international mobility program, or seasonal agricultural workers, or international students who they lifted the work hour cap for, right? And you see these people, you've probably seen videos of lineups of hundreds of people applying for minimum wage jobs, right? to me, that does not indicate a labor shortage. It indicates that there's some dysfunction in the market where companies are not willing to pay people what they need to be paid in order to attract and retain them. And so they're, rather than trying to get better at doing that, they're just applying to the government to bring in someone that is not allowed to work for anyone else but them,
Mm.
right? Um, and the government has just been letting them. And as you say, it's not just the liberals. Like, these programs have never had caps on them. And even, with the removing the work hours cap on international students, you saw the conservatives arguing in parliament that, like, the liberals were too slow to do that and they would have done it sooner. And I think it's very much like a pro capital and anti labor thing that we're doing. um, it's, we're just flooding the labor market with a lot more people, which drives down wages for people who are already here, like people who are born here, people who are first generation immigrants and new immigrants coming in. They're just putting them in a situation to make sure that they are always competing for jobs and that companies are never competing for people. Like, when was the last time you heard of anyone having multiple competing job offers,
Yeah.
right? Even among all these claims of labor shortage.
Yeah.
And
Yeah.
I
Yeah.
don't think there's any situation, unless we have absolute true full employment where there's nobody unemployed, where we can say that we have a labor shortage for lower skilled jobs, right? Like jobs that don't require any certifications, let's say, right? You might require a bit of on the job training or something like that to build up the skills that you need for that specific role. But you can do that with somebody who is already here, rather than just trying to, pluck someone from another country and, try and drain labor from them. Um, yeah, I
No,
think it's
I
kind
think
of a
you make a
big
good
mess,
point. Yeah, I think you make a good point. Like I'm on Twitter all the time, and I feel like it's just where you can get the most up to date news because it's not censored. And I always see these lineups that are just absolutely massive. I saw one at an LCBO in London, Ontario, and to work there, like you said, it doesn't, in no disrespect to anyone, it doesn't take a lot of education or some sort of crazy certificate to work there. And there's no way they can fill all those positions, LCBO alone, like any of these job fairs. It's very much visible that it's, someone who is foreign. And like when you go to, say Tim Hortons, or you go to these fast food restaurants, they used to be like high school students. Like I would always, I'd always know people in high school who had a job at a local Tim Hortons or a Starbucks or something along those lines. Now it's visibly, and don't take this as offensive, whoever's listening to this. It's visibly, you can tell it's probably someone from another country who just came here. So you're almost looking at these big corporations exploiting this labor. They probably love it, right? They probably like, I can try and drive down the price of the labor, and they can only work here, like you said. And yeah, not to mention these diploma mills that we saw at these strip mall colleges, like just what a ripoff those have been for the Canadian economy. But it feels like people are more open to these conversations now, as opposed to a year ago. You would have been canceled on the internet if you ever talked about cheap labor, or anything along those lines. But yeah, I think, how do we kind of get out of this low productivity that we're in Canada? We've just had 7 quarters of negative GDP. It's like we're just not investing, and we're almost just punishing people who want to do really well, with their career and with their life and starting a company. We're almost saying like those people are the greedy people, and we need to tax them more to pay a little bit more for the middle class. But I think that the middle class has almost been a little bit destroyed over COVID, with inflation and with prices going up. So my long-winded question is, where should we invest, do you think, to make this country more productive and bring more jobs here, and not have 50 to 150 people outside an LCBO looking for a job.
Well, like as I said before, I think we've got a long-term problem with short-term thinking. So, rather than trying to solve all of our problems with the quickest solution, right? Like if a company needs an employee with a certain skill set, like construction or nursing, let's say that was like one that the government needs a lot of, um, we should be trying to invest in workers and, working conditions, and also, technology to help people be more productive, right? Like machinery, intellectual property, whatever. That's the kind of productive things that we need to be investing in. rather than just trying to say, okay, we're just going to hire more people right away and we're going to try and grab them from wherever we can. Right. I've seen articles with construction company owners saying like, well, we have to hire temporary foreign workers because if we hire people from here, we train them for a bit and then they just leave to go somewhere else. And so they need somebody who's kind of like locked into their company. And you hear the same thing with nursing. Like we say that there's a shortage of people in nursing, but in construction, I've talked to many people who said they basically left the industry because the pay was bad, the working conditions were bad, and there's no job security or anything like that. Um, so companies are not meeting what they need to retain people. And in terms of nursing, like if you look at what's said by the Canadian Nursing Association or whatever their kind of advocacy body is, uh, we have plenty of new graduate nurses coming out of Canadian universities, but we have an attrition rate of something like half to 2/3 within the first couple of years because the conditions for working in hospitals for nurses are so bad. Like they can't retain people, so there's constant short staffing. So people are working really long hours in really stressful conditions. There's not enough security to protect them from harassment or violence in the workplace. And, quite reasonably, people are saying, well, I'm smart, I'm educated, I'm not going to put up with this, even if you pay me a bit more money. And certainly not if you're paying me crap money, right?
Mm.
And then beyond that, I think the broader problem with Canadian business culture is that they're not really willing to put any money at risk. Like, in the financial sector, that has helped us a bit because we don't have the same kind of insanity going on that was going on in the US leading up to 2008. But in other sectors, I think it's a real problem that, and again, this is kind of anecdotal or conjecture, but it's really, really hard to get a Canadian company to put up some money for trying out a new technology or a new work process or new machinery or whatever, unless they are absolutely 100% sure that they're going to get their money back, right? Whereas, in the States, if you say, okay, this is going to cost us like, $10,000 or like $50,000, but it has the potential to give us an upside of a few $100,000 a year, they'll go for it because, there's a big upside. And if it doesn't work out, well, it's not that much money, right? But I think we're a little overly risk averse in Canada. And part of it is because there is so much regulation and red tape that, if you make an unprofitable decision, it may take you a long time to undo it.
Right. I was actually going to lead into that. Do you think that there's too much there's too much red tape and not enough like government approvals on all these projects? Like I was reading an article just saying we've lost billions in our commodity sector because we shut down these projects. We just don't allow the ease of them to happen. An example could be mining certain minerals or something like that, or even batteries. Like I know we don't do anything with the EV batteries, but yet we want to be so pro EV in this country. And then also with housing too, right? You have these three: you have the provincial government, you have municipalities, you have the federal government. Like there's so many different hurdles that we need to jump through just to get a home built. Yeah, what's your kind of take on that? Do you think the current government is just way too involved where they're not allowing the free market to do its thing? And I know Kevin O'Leary always talks about how many natural resources Canada has. We should be this dominant country on that force. Is that something you're also on board with and believe in?
I think there is, kind of excessive amounts of regulation and approvals and appeals and whatever that it takes to get any of those larger projects started. I think we would be better off if, as you say, the different levels of government were all pulling in the same direction, which is that we want these projects to happen, but we want it to happen in a responsible way. So what does that look like, rather than trying to say, here's this long, long, long list of things that like any one of which could completely derail the project, that you need to meet all of them. Instead, it should be laid out clearly at the beginning, with a lot less of that kind of initial mobilization cost, um, to try and get something built. Because, like you say, I mean, Canada is kind of where big projects come to die, right? It's very, very difficult to get anything built here. And there's a lot of, for example, environmental concerns about this sort of stuff, because we can say that, yeah, by and large, the oil and gas industry is bad for the planet, right? Which it is. But the thing is, people are going to be using oil and gas one way or the other. Like what we can do about that is try to reduce our own use, but it is still a global market, right? And we only have control over what happens here. But in a global sense, if that oil is going to be used, it's going to be produced. So would you rather have it produced here where we can actually, benefit from it financially and have some control over the environmental regulations that govern its production? And the same goes for mining, right? Um, or would we rather outsource that environmental damage to another country to feel better about ourselves?
Yeah, that's a
Right?
great.
Like if you look at mining in South America, for example, they are just like complete cowboys. They're just poisoning water sources and local populations and not giving a damn about it. And it's because there's no regulation there, right? Whereas here we've got so much regulation that we cannot produce anything, which also, it doesn't benefit the environment if we're still using all of these products and products are still being used around the world because it's being produced somewhere.
Yeah, yeah. I always think of the analogy of like it's getting produced in another country and then it's getting shipped here, so it's causing more pollution in a way. Although like we may feel good about ourselves not producing as much oil and gas, yet we're still consuming it. It's just we're paying another country for the imports rather than having it made here in a more responsible way with less shipping costs. And then the Canadian who works at this mine will get paid. They'll put food on the table. They'll be able to support their kids. They'll get taxed on that money. Instead, we're killing these projects, and it's the same with housing. It's like, you look at Oakville, my hometown, they had to give back the accelerator fund money because they're against density, right? Because all these people in Oakville got a lot of money. Their house has gone up a ton in value, and they don't want anyone in their backyard. And it's just so you have Justin Trudeau promising, we're going to build more housing. And then recently he was on a podcast saying that, well, housing prices can't go down. We're going to make it more affordable, but housing prices can't go down. I'm of the mindset that the only way it can get affordable for millennials and Gen Zs is to have house prices come down. Like I think that's a reality that we need to face. What do you think?
Yeah, I agree with that. And that's actually something in my very first video I did about the housing bubble. That was like my explanation of why the government interferes so much is because so many people have tied their entire finances and their retirement to housing. So no government wants to let prices drop. And I got a lot of flack in the comments for saying that. But now we're seeing that a year later, the government is coming out and saying that explicitly and just admitting it. And I don't think it's a remarkably insightful observation. If you're paying attention, it's pretty obvious that that is what has happened. But I mean, people still don't want to admit it. But yeah, you're not going to make something affordable without reducing the cost,
Yeah.
right? I'd say they want to do two opposite things at the same time, which is let people maintain all of this kind of like home equity on paper that they have so they can use it to fund their retirement, because we're not just going to let seniors starve in the street. So somebody's got to pay for it. And I think ideally what the government is trying to do is transfer the debt burden from that older generation to the younger generation and kick the can down the road again. Um, but if they want housing to become affordable, they can't just build, some kind of affordable housing that is only accessible to people who need to afford it. I mean, they kind of can. You could do like income tested, non-market affordable housing, but it doesn't do much for like the market as a whole and like middle income people who are still struggling, right? You need a functioning overall market, and to get back to that spot where you can afford a place to live on a regular salary, like prices do need to come down. There's not really any two ways about it. And as you said, like a big part of that is supply, and right now we have absurdly low vacancy rates, and I think that's kind of the vacancy rate is the underlying keystone of the whole like problems in the market that we're seeing right now, where things are rapidly destabilizing. um, I thought when interest rates went up, that was going to immediately torpedo a lot of these highly leveraged landlords, because they wouldn't be able to raise rents an infinite amount, right? Because they would have to start competing for tenants if they wanted to keep their properties going. but it happened at the same time that we saw a big increase in our temporary population, right? Or non-permanent residents, I guess is the way to put it, because it keeps growing every year still. So, and that drove down vacancy rates. And so now tenants are competing for apartments again, even if the rates are exorbitant. But then, of course, what you're seeing in Toronto is that, landlords can't afford their mortgage, so they pump up the rent. And now tenants can't afford their rent, so they just can't pay it. And now the landlord tenant board is completely flooded with applications and there's a huge backlog. So anybody who has a tenant that they need to evict and who isn't able or willing to pay their rent is basically hemorrhaging money. Yeah, it's to me, I think a lot of people are trying to maintain optimism, but I'm seeing kind of the whole thing unraveling at the seams.
Yeah, I see it too, man. I see it unraveling all the time. And like just to pivot a little bit here too, is that what do you think about this, the foreign market coming into Canada and this white collar crime as they call it. I was following Sam Cooper's work. I'm not sure if you're familiar with his work on what happened in Vancouver and how prices got there. I also had a client who I worked with, and he was telling me that he does financial crimes, and he was saying it's so bad that in Vancouver there was a building for sale, pre-con building, and if you wanted to buy a unit in that building, the sales center was in Hong Kong. So you had to go to Hong Kong to buy the building. So if you're a millennial moron, you and your wife see this building, you're like, I want to go live there. Like, where's the sales center? How do I get more information? You'd have to fly to Hong Kong somehow with your deposit. I don't know how. And then buy that unit. So I saw it big time when I was in the market in 2016. That's when they added the tax. But in Oakville, you saw a huge Chinese population come in, and you'd see one guy who bought it's an outlier example, but he bought 5 houses on the same street, and just rented them out. It's almost like a way to park money in a safer currency, and kind of get out of a country that could be a dictatorship. And I don't know what's your kind of opinion on that. The data is not very clear on it, but I think if you just take a look around, you're almost like something changed here pretty fast in the last decade.
Yeah, I think that kind of money laundering is a factor, but I don't think it's the primary underlying driver of price increases. I mean, you
Mhm.
still see Canadians buying and selling properties, and we make up the majority of the market, right? So
Right.
if we're still willing to engage with those kind of ridiculous prices, then like not only is it we're contributing to the price increases, but we're also enabling that kind of money laundering. I think something interesting that was in the Bureau. There was like a big article in the Bureau about these money laundering schemes that were going on. And one of the interesting things that was listed in that, I think was from a previous investigation, is that yes, there's a lot of money laundering going on, but they're not just straight up buying houses in many cases. There is still a mortgage attached to it. And so what you have actually is you've basically got a straw purchaser who gets a mortgage and is parking money for somebody else who's trying to funnel often proceeds of crime from another country, whether it's in Asia or South America or wherever. Um, but they still have a mortgage to pay. And then when interest rates were going up, now they're suddenly having problems
Right.
carrying that mortgage, even though they supposedly have hundreds of thousands of dollars in offshore income from like a remote job that they have wherever. Like that's what they put on the application. But now they're saying they can't afford the mortgage. And so now that scheme is kind of unraveling as well. Uh, so yeah, I mean, it's something that has received a lot of attention. I think because it's an easy scapegoat.
Right.
Like we could say, oh, if we just got foreign buyers and foreign investors out, then Canadians could continue to make ungodly sums of money, but somehow still afford housing. I don't think that's the case. I think we're participating in the insanity ourselves. And if we're willing to pay these prices now, I mean, who's to say we wouldn't be willing to pay them if there weren't foreign buyers in the market as well, right? It
Yeah.
depends on how much of the market they make up, which seems to be not that much.
Not that much. Yeah. No, those are some good points. I like that perspective. Do you think housing is almost like a Ponzi scheme? Do you think that it's almost at this point where it's hit its top? Like, do you see a 2008 financial crisis happening? I've watched The Big Short 3 times, and it seems a bit more aggressive in that sense, where a stripper was buying 6 or 7 homes with no money down, like these ninja loans, no income loans. But I don't know. It seems like house prices are exponentially higher here if you look at the median price versus the U.S., and they're a lot more productive of an economy. So I'd love to hear your thoughts on what you think kind of happens next.
Yeah, all of our metrics, if you look at them, like price to income ratio, household debt ratio, the amount of our economy that's tied to housing, et cetera, all of that is much, much worse, or at least somewhat worse than it was in the US prior to their financial crisis. The main difference is that we have a more regulated financial sector and there's more backstops built in, but that has allowed us to basically tie more of our economy and more of our household finances to this one asset, right? So I think we're probably not going to see the kind of rapid collapse that they saw in 2008. I think we're already seeing the crash happening, right? A lot of people have been asking me, oh, you think there's going to be a crash, which I never said. I said I'm describing a crash as it's happening.
Yeah.
But if you look at like real property prices, like inflation adjusted, we're currently off the peak more than we were in the like late 80s, early 90s crash, right?
Mm.
Like we've seen a bigger price drop.
Yeah.
The difference is that one took 9.5 years from peak to bottom in terms of real prices, and we've already surpassed it within a couple of years.
Yeah.
So I think we're not going to see that kind of rapid crash, but we're going to see probably a prolonged period of pain drawn out over many years, which is kind of our preference as Canadians, is slow suffering. But it's going to be hard to convince people that this was a result of a housing bubble that is slowly kind of like deflating and prices are grinding lower over time by being eroded by inflation. If people see their home price increase by 1% year over year, they'll say, oh, I'm making money. But if inflation is 2.5%, you lost money,
Yeah.
right? Relatively speaking. So
Um,
uh, yeah, I think a lot of what is going to happen is, again, opportunity costs, right? Is people are going to be seeing a lot of their household income being soaked up by interest payments. So even if they hang on to their house and they make it through the crisis and they'll say, okay, well, I'm in good financial shape because I own a house. The question is, what have they lost that they could have done with all that money in the intervening, 10, 20, 25 years, right? Yeah, maybe you ended up with the house, but you still lost a huge opportunity because so much was tied to housing and debt and this idea that housing is the one bulletproof investment that will make you secure forever.
Yeah, very good point. I think that too with housing, and it's when you relate it back to the economy, not just the opportunity cost for the individual, but for the economy, right? Now people aren't spending as much money. Like they don't understand that the US has these 30-year fixed rates. We don't. We have renewals coming up. We have a huge wall of renewals coming up. You have the variable rate holders who are a good amount of the market. And why is the US economy still kind of chugging along here? Well, it's because they actually have money to go out there and spend because their mortgage payments didn't change and their household debt isn't as high. So like for me, I think that the unemployment rate will continue to tick higher over these years because a lot of Canadians won't be spending any money or they'll have to pull back. There's going to be less money within the economy, even as interest rates come down. In my opinion, it doesn't matter unless it's substantial because of these 5-year terms are coming up, right? People locked in 2020, 2021. Now we're getting to 2024. 2025 is just around the corner before you know it. And these renewal walls are going to come up. So my long-winded point here is that I don't think it's going to just magically get better over the next couple of years. I'm on board with you. I think that if anything, the pain has almost kind of just started for Canada and what's to come. Even if Pierre Poilievre gets in, and I don't think it's going to save us right away. I think it's going to take a long time for policies to ripple through the economy.
Yeah, and a good example of that was posted by Ben Rabideau on Twitter was he posted a chart showing that in terms of financial stress for borrowers, the majority of the pain comes after the first rate cut, not before. Like this is not going to be a bonanza, right? The reason that the Bank of Canada starts lowering interest rates is because the economy is struggling, right? We've seen weak job numbers, weak GDP numbers, and low, like inflation has been dropping as well, and it's getting closer to target. So they're kind of easing up on interest rates. But the reason that is happening is because of the overall financial stress that's happening in the market, and that's going to continue carrying through, right? It doesn't really matter exactly what peak interest rate we hit or exactly the timing of the first rate cut. What matters is how high interest rates stay and for how long, right? It's kind of the area under the curve, the integral, like as you would say. But I had another point here that I was going to get at, which is that over the past 10-15 years, something that we saw discussed a lot in papers and articles about the Canadian economy was that our economy wasn't super hot. It was kind of chugging along at a bit of a steady pace, but a lot of that was driven by something called the wealth effect, which was that because people had their home value increasing so much, which again is an unproductive asset, but they had all this equity secured against their home, and they had the ability to either borrow against it or even just the confidence that they would be able to use that equity as their retirement plan, that they were more willing to spend more money, whether by borrowing for renovations or for vacations or major purchases, or just by saying I'm going to spend more day to day because I'm all set because my house is worth $900,000, right? That was called the wealth effect, and that was an economic stimulus for us. But if we have rock bottom interest rates and our economy is still growing at a fairly typical like 2% or whatever, and a lot of that is being driven by people's confidence that they can get all this money out of their house, then you don't really have a real functioning economy, right? You just have, like you said, kind of a Ponzi scheme where people who own have money and people who don't own don't have money, but they're kind of eating up their own home equity with their spending, and they don't really have a retirement plan. And now that we've seen monetary policy tightening, right, interest rates rising, more restrictive borrowing regulations, we've started to see economists talking about what they call the inverse wealth effect. And I'll leave it as a question for the listeners what they think the inverse of wealth is.
Oh, that's now you're making me think as we do this podcast. But no, it's true. It's this wealth effect has come into play, and I always read RBC Economics, and they just talk about this lost decade that we had. And I feel like a lot more people are willing to get education and learn around what's going on rather than just, I always hear people's parents say to their kids, just get into the housing market and buy it. Look at us, like, look what happened to us. And as people know, past performance is not a guarantee of future results. That's for sure. I guess no financial advice to anyone, but where does millennial moron invest his money? Where does he look for alpha, and where does he like to kind of set himself up for the future?
I don't look for alpha. It's a very, very boring index investing strategy that I use,
Okay.
which I've been thinking about, making some videos about it because I think it's much more simple to
Yeah.
invest than people think, and you really don't need that much money to get started. But we'll see if maybe someone will pay me to make that content for them.
You heard it here first.
Or I thought about it as a free course, but I'm thinking, well, maybe I could partner with like a discount brokerage or something, because it would be a lot of additional effort on top of my normal content schedule and full-time job. So
Yeah, I know you
uh,
I know it's not easy to make content, and you're not even in the business. Like I guess I'm selling something, so I have an incentive to do what I do. So nobody knows what Millennial Moron does, maybe just his boss, but he's his content is very it's very intriguing, but it's hard to make. Like I know what it feels like to make a YouTube video and edit it, and you say the
yeah,
wrong thing and you're like, oh my God, I said the wrong word. Like, do I go back and change it? It is a very like scrutinizing process. So, but we do appreciate what you do. If you were to give three things for the Canadian housing market, like say, you're a millennial moron, you're the prime minister, and you have the control, or you're an economist or something like that, what would you do to help this market? What would you do to help, our generation? Because that's why I feel like I do this podcast, is to help the younger generation, navigate what's going on.
I would probably dedicate more to actually getting new homes built, whether it's through like capital infusions or just tax incentives like we used to do. We used to have basically tax incentives for new rental housing that were triggered by low vacancy rates. and we would do it well in advance of it becoming a crisis, right?
Mm.
Whereas now we've let things get so bad that people can't possibly deny that there's a problem because, again, so much of our economy is tied to it. So we haven't been wanting to interfere with that, but really we have to decide culturally whether we think housing is an important thing that everyone should have access to, or if it's a way to generate wealth, right? So that would be one thing, is investing more in actually building housing. Another thing I think would be disincentivizing the use of housing as a speculative asset by limiting the amount of debt that it's easy to get access to as an investor. So, for example, one thing that people can do right now is they can buy their primary residence, right, with a 5% down payment, and then as housing prices were increasing, they quickly hit that 20% home equity, that kind of like loan to value ratio, where they could then say, okay, I'm going to turn this into an investment property, and I'm going to buy myself a new primary residence with another 5% down. One thing you could do is just either eliminate that kind of insurance program entirely, which I think it's too ingrained into what we're doing. So we probably can't do that, but we could make it so that you don't have access to that 5% down payment if you already own one property.
Mm.
Right. I think we have a lot of programs that are designed to incentivize home ownership, but we allow access to them to a lot of people who already own property. So it's not just making access to the market easier for people trying to get in, it's making it easier for people who already have a lot of capital to outcompete first-time home buyers. And yeah, I think if there's any last thing generally, it would just be to stop trying to infuse so much liquidity and money into the mortgage space, because that does create a lot of these issues, right? And there's layers and layers and layers of this, right? Because the CMHC used to basically build affordable housing. That was a big part of their mandate. And then at some point, they kind of switched over to being a mortgage insurance provider, which just, it reduces interest rates for borrowers by taking all of the risk away from the lending institution, right? So banks can continue to collect interest, but with no risk because it's all insured by the taxpayer. But then, that wasn't good enough. So then we started letting banks package these insured mortgages into mortgage-backed securities and sell them out into the market. And the payments on those were guaranteed by the government. And then there still wasn't enough demand to keep up with, or there wasn't enough liquidity to keep up with the demand. So then we had the government buy any extra outstanding mortgage-backed securities and then reissue Canada mortgage bonds. We're just like a vanilla bond that carries the full guarantee of the government. And then we wanted even more just recently. So we basically doubled the issuance of Canada mortgage bonds and had the government buy half of them themselves. It's like, you see what I mean? Like how
Yeah.
it seems insane when you actually explain
When
it.
you break it down, yeah, it just seems totally
And
insane.
it's, when you're just talking about one little step from like the status quo to the next thing, it kind of seems justifiable. But over time, we've grown into this really weird house of cards where the government is, insuring all the mortgages and buying all the mortgages.
Yeah.
And
It seems like
what
it
are we
could lead
doing?
to a trouble. It seems like it could lead to a full blown recession, or a full, well, I think we're in a recession, but a full blown crisis.
Yeah. And, I think, yeah, I don't think money should be free to borrow because it just leads to all these kinds of problems. I think there's fundamentally been this confusion of cause and effect where we have tried to drive more people into homeownership because we said, okay, homeowners tend to be more financially stable and have a higher net worth or something. And so then we're like, okay, let's get everyone into homeownership. And we've done that by allowing people to just take on more debt for cheaper, right? And that doesn't make them more financially secure. What made homeowners financially secure is that they were already in a position where they could buy a home, right? So they had money saved, they had income coming in that they could use to buy it, and they could manage those interest payments, right? Or even potentially buy a home outright. I know people who did that back in like the 70s, right? They just worked and saved for several years and then just bought a home outright, which was possible if you were working a lot and fairly thrifty. You could save up the entire purchase price of a home over a course of, whatever, 5 years or people will argue with me about that, but much easier to do that then than it is now.
Yeah.
Uh, so I think what we need to do is instead focus on what it was that got people to that financially secure position where they could buy a house, right? So we should be trying to get people better jobs and I guess like better financial education so they know what to do with their money and just try to have a more robust economy where people are more financially secure and have more money coming in. And then that housing thing will kind of take care of itself if we have, you know, overall people making more money and a little more like wealth equality. Just because, because everyone is doing well, not because we're trying to intentionally redistribute it, just because we have a strong economy and there's a lot of good jobs available.
Yeah.
Right. So that's how you get more people into homeownership is by making people more financially secure at the front end, not
Yeah.
by giving them access to this very precarious financial position where they hold a huge asset and a huge amount of debt with very little income. Right. That doesn't help people,
No,
as
I
we've
think
seen recently.
yeah, you've nailed it on the head. It's that education piece. And even in the real estate market, I get really frustrated because you're helping people buy a very expensive asset, right? Like if you want to be a hedge fund or a portfolio manager, you got to run through hoops just to manage people money. We have to say things like this is not financial advice because of those regulatory scrutinies. In the real estate market, like the fact that you need a high school diploma and then you just have to pass this test to help people find, a very expensive asset that they're highly levered on. Even the mortgage test is an absolute joke. It's in one test and you can be a mortgage broker. Like you can't give people sound advice if you're not educated and or have gone through the process. Like I'm a big believer, if you're a realtor, you should have to work almost as like a co-op and work for a realtor who has that experience, who can teach you these things, because you're writing these contracts as if you're a lawyer and you're giving advice as if you are you're going to help them financially. And the amount of realtors that believe in this narrative that if you look over a long enough time period, the market only goes up is so false, especially in today's market, because you can see the median price was over 800,000 in Canada. Now it's just over 700. So the people that bought at the peak and now their house is worth 200, some people 300, 400K less today. How long is it going to take for that person to get back to that, just the break even point? Like how many percent, like, yeah, their house is down 20%, but they need to go back up 40% just to get back to that level of break even. So I think, having these platforms and having guys like you on my podcast is a big help for people to kind of take a step back and get educated and learn a bit more. And I think you nailed it on the head there. So I've taken up enough of your time. I just kind of wanted to ask you the last question here is, what does your wife think of everything you're doing? And where do you see this going in 5 years?
5 years. Oh man, I've
Oh,
been
I
doing this
know.
1 year now. I have no
1 year.
idea. Yeah, I mean, it's kind of weird because it's something I kind of started as a joke, right? And then it's grown into what it is now. And um, my wife has been quite supportive, although I think it has been like to some extent a frustration for her that I'm spending a lot of time on it. So I'm trying to balance it out more now, especially when I'm doing things like working long hours. Like as we were discussing, I just worked like 13 days in a row, and now I have 1 day at home. And I could work on a video today, but I think I'm just gonna spend it with my wife and just relax, right? Because that's really important to me as well. Now over the coming few years, I guess I would like to grow it into something that I can actually use to displace some of the work I'm doing at my day job, or maybe even support my living expenses through making videos or whatever. And whether that's just by making the channel bigger and getting more ad revenue or something, or if it's through doing some kind of like paid production of content. I, for me, it's been a bit of a slog trying to get my head around like sponsorships or branded content because I really don't want to do just anything. Like I wouldn't recommend something to people if I don't use it myself, right? So there's all these stupid like payday loan companies that are trying to offer me work, and I'm rejecting it outright. Um, so now I'm trying to think of like, can I pursue a company that I do want to work with and see if I can get something going that way. But yeah, I mean, for now, all I'm trying to do is just make good content and give people like reasonable commentary and try to do it in a way that's like not politically biased. and just keep growing it that way, right? And just see where it goes. I think that that's kind of the tack I've taken with a lot of stuff in my life, is that I don't always have a long-term plan. I think it's just, do the right thing now and take opportunities as they come.
Yeah, I think in 5 years you would be surprised how well you'll be doing on social media. I think that social media will start paying for views, and a lot of these content creation sites will change. And I think that with YouTube and everything growing, I think that the creator fund will come to Canada, and your TikTok will do really well. It already does well, but I think that you should be getting paid for those views. That's for sure. Because if you were in America, you would be. But hey, man, I can't thank you enough for coming on the show. People are gonna love this episode, and I think that I'm gonna cut up a bunch of clips for you. So tell your wife that you'll have content made, and you can take some time with her. And yeah, thanks for coming on, and hopefully you'll come back on in the future. I hope you enjoyed this conversation with me.
Yep. Thanks for having me. See you next time.
All right, we'll see you soon, man. I'm just gonna pause it and then